Hello and welcome to the Stansberry Investor Hour. I'm Dan Ferris. I'm the editor of Extreme Value and the Ferris Report, both published by Stansberry Research.
And I'm Corey McLaughlin, editor of the Stansberry Daily Digest. Today we talk with Larry Lepard, author of The Big Print.
Larry is a classic hard money guy. He manages money from a hard money perspective, which is amazing in itself. But he has a lot of great ideas about what's happening in the world right now and why gold and silver and Bitcoin and other things are really great assets to understand and own these days. So let's do it. Let's talk with Larry Lepard. Let's do it right now. Larry, welcome to the show. Good to see you.
Nice to be with you guys. Looking forward to this.
Yeah, this is an excellent time, so it seems, to understand one of your passions in life, which is sound money. And just before we hit the record button, you were about to tell us what you believe gold is signaling to us right now. And as we speak, as we record, gold has recently surged above $3,500 an ounce to a new high.
Yeah.
Why is it? I mean, why is it doing this?
Yeah, well, it's many reasons, but the underlying cause, I'm sure you guys know and I agree, is that the monetary system is under a lot of stress and it's kind of broken. And, as I say, there are a lot of reasons, but I think that probably the best is that gold is very good at sniffing out monetary debasement, which is to say money printing.
Mm-hmm.
And, as the book I recently wrote talks about, money printing is almost a certainty mathematically, given what's going on in the economy and the world right now.
Mm-hmm.
The government deficits are large and getting larger. The bond market is getting fed up with being asked to hold long duration bonds that are going to pay less than inflation. And, they're going to print the money to keep the system going. And that means that inflation is going to become a persistent problem. Gold's really good at sniffing that out. It knows what's going on. It also becomes kind of a safety bid, in a world where things are getting rougher, the stock market, the bond market, and the economy. People turn to gold as kind of a safe haven. And the economy, in my view, is really in deep trouble. These tariffs, even if they were to say right now, we were only kidding, they kind of threw a wrench into the works and people are pretty, you can't unspill that milk. I mean, I think the economy is going to have a rough ride here for the next year or so.
So it's interesting to me that gold is surging during, it didn't, people were really disappointed actually with gold's performance while CPI inflation was rising and rather high. And now those numbers have come down. And gold is surging to new highs in a completely different, apparently different set of issues. It took something else rather than mere CPI inflation for gold to really get rocking and soaring to new highs. I find that interesting.
Yeah, I think that's right. Yeah, it looks around the corners. I mean, it went the last, the book I wrote is called The Big Print. We've had two big prints. One was in 08, one was in 2020. And the 2020 big print kind of took gold from 1365 to 2070, and then it kind of sat there, even though inflation was quite hot. But it anticipated that inflation, and it traded at 2070 until it broke out last March. And I think it's now anticipating the next round of inflation, even though inflation has, in theory, been coming down. In reality, it's probably not. It looks around corners. It's a leading indicator of trouble is kind of the way I look at it.
Larry, I find it also very interesting that our Treasury Secretary, Mr. Besant, has made it clear that gold is his largest position. And he was telling us this last year.
Yeah, I thought that was fascinating as well. Also, that he said last summer, the monetary system is not working correctly, and there's a good possibility that we're going to have to do something to alter that, something on the scale of the Bretton Woods agreements in 1944. And if that occurs, I want to be at the table. So, there's an argument that says that in the back of his mind, he's very aware of this Triffin's dilemma problem that we all face. And And then of course this weekend, I thought it was interesting that Trump tweeted that he who has the gold makes the rules. I thought that's interesting. So you can't help but wonder if in the back of their minds, the administration is thinking at some point we got to return to the gold standard here. It sounds a little far fetched, but I don't think it's impossible. And maybe that's why they're bringing all the gold back from overseas. Maybe they're trying to refill Fort Knox since they probably raided it, in the 60s.
Right. Yeah, that's what I was just going to say. 'Cause I add to that list recently, Besant saying, I think it was like a month ago now, but about how the gold imports into the U.S. That's why, that Atlanta Fed GDP number was negative, which all of a sudden we have a gold adjusted GDP projection, which raises eyebrows.
There's a lot of stuff going on, and it's very hard to know exactly what's driving all of it, exactly what it means, but people have woken up. I mean, a good example is until maybe 3 to 6 months ago, almost every gold analyst in the world was saying, well, this 2,500 or 2,300 or 20, whatever it was. Yep. And this is just a pop, and we're going back to 2070. Don't build your models around this. And then the other day, of course, this got me worried that we're probably near an interim peak. Goldman Sachs came out and said, well, we've got a $4,500 target.
Yep.
Wow, that's different.
That's the peak. Yep.
That's a real change in psychology, guys.
Yep.
We're 2,500 going back to 2000. And suddenly we're projecting 4,500. Now, don't get me wrong. I think we'll get to 4,500, but look, it's way up on a spike right now. And so, for people to think it's going to continue at this rate, that's probably unrealistic. Yeah. But what I do think it has done is it's woken people up to the fact that there is an issue here, and we are in a bull market for gold. So, and those things are good for those of us who've invested in this area.
Yeah, I know people who hold gold and are sound money advocates, and every now and then one of them will say, I don't know if I want to live in the world where gold goes to $25,000 an ounce.
Well, there is that. Yeah, there definitely is that. I mean, be careful what you wish for, right? I mean, it would be, but look, as investors, our job is just to protect our capital, and in my case, protect my investors' capital. And, even if we do have that kind of a world, I mean, I think, and my book talks about this, as bad as this transition is likely to be, and it will be bad, there'll be some serious inflation here. Mm-hmm. The right answer, Dan and Corey, is to reset the whole thing to the gold standard or standard based on gold Bitcoin. And then, at that point in time, inflation will be solved. I mean, the history of inflations is that when you return to sound money, they stop. And so while the process of getting to that may be quite painful, I think most people would, maybe accept that pain if they thought that there was an end point at which the pain would stop and things would be fair again. And so if we go back to a gold standard, at some point in the future, I think things will improve on that standard.
Yeah. Trump has tried to tell us, well, there will be near-term pain. Every now and then there's a mention of that. And I don't, you can say it and people can hear it and people can say, I appreciate that. Okay, I understand. But, it's sort of like saying, I'm going to stab you right now and it's going to hurt a lot. And you're saying, yeah, I know. You're going to stab me and it's going to hurt. Somebody stabs you. Then you go, oh my God, why did you stab me?
Right.
It's visceral. In other words, the reaction becomes emotional and visceral, and you get that.
I think that's I think that's exactly right, and the right comparison. I think Besant and Trump maybe don't really even understand how hard this is going to be and how much pain it is going to cause. I mean, 50 years of mismanagement, which is what we've had since we went off the gold standard. You can't solve that in a day, or maybe even in one presidential term.
Right. So, and you can't do this idea of basically putting having a protectionist U.S. economy, right? Putting up trade barriers around the U.S. economy and bringing manufacturing back, reshoring, however you want to talk about this. This doesn't happen overnight either, right?
No, and we're not going to be assembling iPhones here in California.
Yeah. So that interim pain, It's one thing to say, okay, well, we need to go through this pain to return to sound money. Let's use that example. But it's another entirely to say we need to risk one of the worst recessions, depressions in the history of our country so we can make stuff here instead of buying it from there. Because once you get into that, to stay on track towards that goal becomes really, really difficult, right? In other words, the unintended consequences can easily overwhelm this long-term goal that Trump seems to have. And then
I fear that you're right, and that the social unrest and so forth could really become quite extreme. And,
right.
But it's. I mean, I've thought about it a lot. You can't make an omelet without breaking eggs.
That's why you're here. That's why we're talking to you. We want to know.
Yeah. Well, and is he breaking the right eggs in the right way? I don't know. I mean, I think there are probably more enlightened ways to go about doing what we're doing, but he's a disruptor, and he's got his own style, and so he's doing it this way. And I mean, it had to be done, in my view. Going in the direction we're going had to be done. Now, whether the dials had to be set the way we've set them, and I thought the Navarro, tariffs, Navarro-Lutnick and Miran tariffs were, pretty kind of nutso. I mean, the way they, we're going to immediately close these things with these enormous tariffs. I was like, what? I mean, there's a, it strikes me that we don't necessarily have to declare war on the world, and, on the business world and on China. And, if you're going to enter into a trade war, you want to ask yourself, am I coming into this thing with a glass chin or not? Because I think the glass chin is that, we've got this incredibly unbalanced economy with these huge deficits, both the fiscal deficit and the trade deficit. And the stock market is at a record high and the bond market's held in there. But, you disrupt it this much, and, both of those things could change a lot.
Yep.
And then, as you say, there's so many unintended consequences. You just don't know, right?
Yeah.
So, I mean, sadly, I too, like you guys, or like I think you were hinting at, Dan, I fear, what might happen here. And even if they're smart enough in 90 days to say, we were just kidding, we're not really going to do these tariffs. I mean, and that, to me, that would be the best case scenario.
Yep.
There's a chance that a lot of damage has been done, and even then, we're still going to have a rough patch. So.
Yeah, I so badly want this to go.
Oh,
well.
absolutely.
Like this,
yeah.
This is like one of the best chances that we've had to find some sound money, I think, in a long time. But they're not attacking the fiscal deficit, really.
Yeah, I mean, the DOGE thing was extremely disappointing. I mean, for Elon to come out and say we'll take $2 trillion out, I mean, he hadn't done any of his homework. And, to hold the position he had and make that statement, I was just. It kind of makes you wonder, who's running the show here, and how thoughtful are they? I mean, look, we've got a very integrated, very complicated problem here, and it's going to take, in my opinion, it would take, masterful political and economic and intelligent leadership to navigate through it. And sadly, I think I'm not sure God could do it, but sadly, I think that either side would fall short. I prefer this side versus the other, because I think the blue team would have just said, let's keep partying on, printing money, made inflate. It would have been a horror show. So this, attempting to go in the direction we're going, I think that's the correct choice. Whether or not we're doing it in the correct way, I guess I could criticize some of the steps they've taken.
Yeah, I think we could all find problems with how it's been done. But I noticed that to me that there was a key moment. April 8th and 9th, when the bond market freaked out on the 8th, Trump noticed it that night, and he put the 90-day pause on the next day. And, this was, I had written just within the past couple months about Clinton era and Obama era run-ins with bond vigilantes. And this was Trump's bond vigilante moment. So now it's like
the ghost of James Carville rose up and said,
yeah, that's right. He's still alive, but is he really? I don't know. So here we are, and he's had, it's like vigilantes 1, Trump 0. And where does it go
Yeah.
from here? Because I think, do we all agree that Trump is like the stubborn, I win, I get my way type, right? Um,
Absolutely,
yeah,
and bombastic, and
yeah,
tries to grab the whole field, and of course, then concedes whatever he has to concede to keep going forward.
yep,
Yeah, I mean, I think those 2 days were absolutely critical, Dan, and that level that they hit. Interday, the S&P was down to like 4,700, and I'm watching that level carefully because when that gets taken out again,
ooh,
then we're really in the soup.
yeah,
But I think what happened there is Bissett went to him and said, "Sir, you got to reverse this, or we're going to lose the bond market right here, right now."
mm-hmm,
Um, and he did, which was the right move. I mean, at least he's listening to Bissett. But
right,
yes, I mean he will keep pushing every boundary, and look, to some degree, being bold and aggressive is not a bad trait, but there needs to be a certain amount of thoughtfulness put around it as well. So
yeah, and it's really not just politically hard. It's how does
oh yeah,
technically hard. It's it's a close to a $30 trillion economy now, 28, 29, something like that. Last time I saw the
about 30, yeah,
yeah.
yeah.
Um, that's a complicated entity, and the government has already
Well,
got its tendrils too deep into it. So who knows
absolutely.
how it all works out when they, try to do the things they do and protect this or that industry or all of them. Um, yeah, I can understand owning lots of. I can understand Scott Bessent owning lots of gold. I can understand Warren Buffett owning lots of T-bills. It's your safe haven
Yeah,
of choice. Uh,
right.
Yeah. There's another way that I think April 8th and 9th were important. And I know you noticed this, Larry. Um, so we get April 8th, right? And that was, the market surged downward. And everyone, oh boy, here we
Yes,
go. And then April 9th happens and Trump says, wait, 90 days. And, markets pop back up. Since the 9th, right? Since the 9th, stocks are down, Bitcoin is up. Now,
correct.
I saw Bitcoin in the past few years, and I like the fundamentals of it, but I saw it just sort of trading like a speculative tech stock. But it's not doing that since
Right.
April the 9th. It's
That's
behaving,
correct. I mean,
yeah,
yeah, the separation is starting to take place. It's not perfect.
no,
It's
but
still a liquidity widget. I mean, it's driven by excess liquidity, but it is starting to behave differently, and I think that will be the most notable change in this particular
mhm,
cycle. I think the stocks and the economy are going to trend down, and I think gold and Bitcoin are going to trend up. And Bitcoin, which by many people have been treated just as a proxy for the triple Q,
mhm,
they're going to come to realize that no, a big piece of what's driving Bitcoin is the fact that there are only 21 million, and it's slowly becoming digital gold. It's the digital version of gold because of its limited supply. So yeah, that's important. And and by the way, I mean, I think this isn't nearly over. I mean, if you look at it on a chart, it's kind of a big bull flag that projects up to I've long held the view that we'll see $140,000 Bitcoin before the end of this calendar year.
hmm,
So,
wow. Well,
and that's without a big print. I mean, if the big print comes, it could be much bigger than that number. But we don't know when the big print's going to come. We don't know how long it's going to take
right,
for Powell to say uncle. I mean, right now he and Trump are locked in this death match, and Powell doesn't want his reputation to be that he's Arthur Burns. He wants to be Paul Volcker, and
right,
Trump wants cheap money. And my sense is what's going on there is that Bissett is actually forcing Powell's hand. Bissett's like, well, sir, don't worry about it. You can rail at him all you want. And he can say he's not going to do anything all he wants, but I'll tell you what he will do. When the bond market goes down another 20% and the stock market goes down another 20% and unemployment starts to go up,
mm-hmm,
suddenly mandate one won't be so important, inflation, but employment will become very important.
yeah,
And then he's going to pivot and print like crazy. He's going to make the last print look small. And
mm-hmm,
I think, look, Trump and Bissett aren't stupid. I mean, when they did this, they knew that what this program would do was it would hit the stock market. But they did the calculus and they said, well, the top 10% of the country owns 84% of the stocks. And so the people who voted for us aren't necessarily the top 10% of the country. They're not going to care if stocks go down 10%. The Main Street doesn't
mm-hmm,
care as much as Wall Street about stocks. And that's all fine and well, except that what does happen is, Main Street or Main or Wall Street. Well, the top 10%, as you saw, this statistic blew my mind when I saw it last year, Dan. The top 10% accounts for 50% of the spending in the United States.
Yeah.
So take the top 10% and tell them their retirement accounts are now 40% smaller than they used to be. And they don't buy the marginal car. They don't renovate the house. They don't buy the new drapes. They don't take the vacation, et cetera, et cetera, et cetera. And so at the margin, the bottom 50%, jobs start getting shed, right?
Mm-hmm.
Well, because Ford doesn't need to build as many cars, they furlough people. So
Mm-hmm.
there may be a delay between the top and the bottom, but if the economy really rolls over hard, which I think it might, the bottom is going to hurt as well.
Ouch. That's all I have to say.
Yeah, it is an ouch. I mean, it's unfortunate, but as von Mises said, I mean, the way to prevent these big downturns is to not let the bubbles form in the first place.
Yeah.
I mean,
Yeah, right.
they should have thought about that when they printed $5 trillion and took interest rates to zero.
Yeah.
Yeah. Because if you want to know why we're suffering now, it's because of what they did back then. And the book lays that out too.
Yeah, somebody needs to point at the Treasury building and say, "Stop that awful racket." I think that was the von Mises line when he was telling them how to fix, the problem. He pointed to the money printing, and said, "Stop that awful noise."
Yeah.
Of course, now the noise is just a keystroke, but it's the same thing.
Yeah, well, it's a lot of keystrokes, but clicking, yeah.
So the other thing with Powell is that now we're getting all this rumbling about getting rid of him and replacing him, with somebody who's apparently more, accommodative.
Dovish.
Right.
Yeah. I think Powell's going to stand his ground.
Mm-hmm.
And even though Trump has asked for a Supreme Court ruling on that, I don't think the Supreme Court is going to go in his favor.
Yeah.
I think we're in a Mexican standoff between Powell and Trump right now. I mean, Powell may ultimately come down a little bit if he gets some help on the inflation numbers and things start to look bad on the employment front. But he needs cover.
Yeah. He
needs real cover. But we also know he changes on a dime. I mean, and he inflation was transitory until it wasn't, and then we're raising forever until we didn't. We're even thinking about, right?
Yeah.
And what'll happen is, you watch. There is a Powell put. He denied it in the last conference, but there is one. And he will, when the market's down 40% and the bond market's going up and, the reverse repo thing is drained and, et cetera, et cetera. I mean, they've already done some things. They did. Right. They've talked about relaxing the SLR, the supplementary leverage ratio. That will allow the banks to buy bonds, which is QE infinity. And they've talked about putting swap lines out to all the hedge funds that are involved in the basis trade. And there's a Brookings Institute paper on that. And so swap line to a hedge fund is nothing more than printing money for that hedge fund. So, and they'll have other programs and acronyms and ways that they'll print the money, but, trust me, they'll do it because at the end of the day, they realize the risk of inflation is lower than some inflation is better than a system collapse. And so I think Besant is pushing Powell into a corner where he's going to have to do it.
Yeah. Yeah, the history of this is pretty clear from way, way back, right? It's like the currency on one side and the banks and the bond markets on the other side, and we always know they save this one. They sacrifice this one and they save this one. They sacrifice the currency and save the other. So exactly. we know that moment is inevitable. In between, who knows what happens, and it can be quite volatile, and we could get periods of like extreme dollar strength in between. It's really tough to call it from.
Absolutely. And this gold price could correct significantly. I mean, I think the longer term trend is strongly up, but there's you may have seen it. There's a great chart that was out on Twitter done by Dan Oliver at Mermican that showed the volatility of the Deutschmark during the 1921 hyperinflation. And it was really incredibly volatile. These currency events lead to volatility. So, it's tough. These trades are tough. Yeah.
Yeah. I mean, if you think you're going to time things, you're not. You're going to get killed. You have to have a sense that there's a lot of risk and uncertainty, and that you can hold your gold, rather indefinitely, and you can hold, some cash. I think is great to have, especially for people who buy stocks. But it's not easy. It's like this is the classic sort of investor foible, right? Things go up, you think you need to buy them. Things fall, you think you need to sell them. And when that is constantly ratcheting back and forth, it is exhausting. It is emotionally exhausting, and some people
It really,
get fed up.
it really is. And Warren Buffett used to talk about this, how it's, it's the one area of the world where people don't, think opposite. I mean, think about it. I think he used the example. You go to the supermarket and steak is, $20 a pound. You don't think, oh my God, give me more steak. It's $20 a pound now.
Yeah.
No, goddamn expensive. I'm not eating steak tonight. And
Yeah.
you go in, the same steak, 6 months later is $10 a pound. You're like, oh, that's good. I'm loading up on steak. But when it comes to stocks, it's the other way around, right? I mean, the stocks are cheap. You're like, oh, nobody likes this. I don't want it. I'm not buying that thing. And it's expensive, and they all want to chase it.
Yeah, it's the only thing people don't want to buy when it's cheap, right? I told my wife this the other day. She went out. I was explaining what was going on with the stock market, and I was like, I'm not too. If I want to buy some things here, maybe, but and I think nobody else wants to.
Why, as Buffett and Munger used to say, I mean, it's a weighing machine. I mean, you gotta know what things are really worth. You gotta know why you hold it. I mean, I hold gold and I hold Bitcoin because they represent forms of money. One's a form of money, the other's an emerging form of money that can't be printed by the government. And I feel like we're in a system where, as you say, Dan, it goes back and forth. You don't know the zigzags, but we do know that the long-term trend, I mean, take a couple hundred years of American history. I mean, this goes back to I talk about in my book, the War of 1812. I mean, the suspended specie payment to pay for that war. I mean, they've been doing this for a long time, and so, and gold has just held its value. And it will continue to do so.
Yeah, I forget the anecdote in This Time is Different by Reinhardt and Rogoff. I think it was.
I love that book.
Oh yeah, I think it was Darius II in ancient Greece. Decided that there's just going to be twice as much money, just at the snap of his fingers, and of course, what happened next. History actually doesn't record what happened next, but it couldn't have been good.
You kind of know what happened next.
Yeah, that's right. Prices went up more than double.
I always go back to the when I first came across this like years ago, it blew my mind. The 13th century Yuan dynasty in China, when they went off, I think it was like silk and whatever to real fiat currency. That was like, we've been screwed ever since then, is what I determined. Like that's
absolutely. They were one of the first to do it. Yeah.
So Larry, how do I know you write about this in the book too? I would encourage everybody to buy or listen to the book. Like, fixing the monetary system, you said, will amazingly fix a lot of what is wrong with society, or will inevitably fix what is wrong with society.
I really believe that's true, and I don't. The book has a lot of examples of it, but I think that fiat currency and the currency is something. I mean, everybody interacts with money. It's how we all exchange value, and it's how we measure our a lot of things. And if you have a form of money that's broken, that it kind of is always inflating and you can't really use as a measuring stick, it's a base layer that affects everything. It affects all kinds of relationships. And there's a lot of evidence that countries that have had very high rates of inflation, the social fabric tears and it breaks down, and it's very unfair. I mean, one of the charts in the book that I like or don't like, but I think it's an important chart, is early on in the book, it shows how the top 1% of Americans now control 92% of the wealth. And that to me is just a stunning statistic. And part of the reason I wrote the book was just the whole notion that, the system is really, really unfair for average citizens, because the people at the top of the food chain, the financiers, the Wall Street people, the hedge funds, government people are connected. They're all able to borrow money at very cheap rates, but everyone else has to pay credit card companies 25%.
Right.
If you can borrow money cheaply and invest it in assets that are earning a good rate of return, well, guess what? It's kind of a one-way ticket to big wealth.
Yeah, like 25% loans, right?
Yeah, exactly. And so that's that's kind of torn up the social fabric, and it's caused suffering and drug and alcohol addictions and problems. And I mean, it's really, really sad how unfair the system is to so many people. It comes down to the core of the monetary system. I mean, there are lots of instances in the book. I mean, we let China into the WTO. They said they'd trade fairly with us. They didn't. And suddenly our entire manufacturing base in the Midwest gets, exported to China. And now all those people who used to have decent jobs don't have anything to do. And they get addicted on fentanyl and all the other, opioids that were going around at the time. And it's just a bad deal. I mean, fiat money is a very bad deal. And, there are enough, we've been around long enough to see a lot of examples of how empires failed. I mean, Rome failed because of the dilution of the denarius. I mean, the French Revolution came right after they printed a ton of money and they spent a lot of money to help us win the Revolutionary War.
Yep.
And then 1789 comes along and you have a French Revolution. So, I mean, it's kind of like, one thing after another of, there are plenty of examples of fiat causing just enormous pain.
Yeah. Nobody well, actually lots of people like it. Lots of people love it. But the rest.
Well, some people really benefit from it, and those who benefit from it defend it. I mean, the Keynesians benefit from it, and the quintillionaires benefit from it, and I mean, Warren Buffett benefits from it. I mean, and that's why he hates Bitcoin so much, because it's a form of money that can't be diluted.
Right. So and I want listeners to know, Larry just said quintillionaires. Google the Cantillon effect. People who are close to money printing benefit from it first, is basically the idea.
Exactly.
Yeah.
It's what I described earlier. I mean, if you can borrow money at 0% or 1% and invest it in other assets, you get really, really rich fast. And there's some real examples of that. I mean, one of the stories in the book was told by Matt Taibbi from the Rolling Stone. In the GFC, this will kind of amaze you. The article was called "The Real Housewives of Wall Street." In the GFC, the wife of one of the big investment banks was able to borrow $220 million non-recourse from the Federal Reserve at a very low rate of interest. So think about this. The wife of a CEO of an investment bank borrowed 220. I mean, where'd she have the money? She didn't have the credibility to borrow 20, and invested it in assets that would earn more than the 1% or whatever it was she was paying. And if for some reason that didn't work out, that debt was secured. The Federal Reserve, it was non-recourse, so she could just walk away from it and say, oh, well, it didn't work. You guys eat that $220 million loss. And if that $220 million grew into some big number, which it did, she got to keep the gains. I mean, it's just blatant corruption. Do you know what I mean?
Yeah.
I mean, and that deal wasn't available to any of the three of us. I can assure you of that.
That's right. Yeah. The best we can do is buy a house when rates are low, and if we haven't done that,
well, that's right.
yet.
Yeah, the only contilion, 3%. I got a 3% mortgage on a house I bought. I was pretty happy about that.
But that's it. That's pretty much it for us. Yeah, that's right.
Then you can't move.
You better stay there at this point.
Yeah, no, that's right. Now I'm trapped. I could never sell it because the rates are so high now.
Yeah. Right. Exactly. I'm actually going through that right now.
A lot of people are. In fact, that's part of what's hurt the new housing market is the people who are in those houses. They should, you're probably having kids. You're ready to trade up to the bigger one, but it's one, it costs more, and two, the rates are higher, and so you don't want to move.
Yeah.
Well, that means the guy or the person starting out, your house isn't for sale because you're not going to move, so they don't have a starter house, right?
Right. Just takes the available supply right down. Yeah. Yeah. So.
Yep. But what I wanted to ask you was, and I'm not asking you to give away, the entirety of the book, but what is the solution here?
Oh, absolutely.
How do we fix this? If you were in the White House, what would you be doing right now?
Corey, you're a great straight man, because buy the book and read chapter 22. It's called Policy Solutions. And I wrote in that chapter the speech that I think the president should give. And I'll just summarize it briefly for you and the listeners. I mean, the president should stand up and say, folks, we've been using the wrong model. We've been chasing a Keynesian model of growth and the belief that we need inflation in order to prevent deflation. And that's caused enormous inflation and a lot of pain. We need sound money for the following reasons. And in order to do that, the first thing we're going to do is we're going to make gold, silver, and Bitcoin legal tender. So that means that if you buy gold or silver or Bitcoin and it goes up or down in dollar terms, you don't owe taxes on that. It's a form of legal tender. They're not investments. So now we have four currencies: silver, gold, the dollar, and Bitcoin. And they all compete on a level playing field, and you can use whatever one you want. And any business can use whatever one they want. If they want to say we only accept Bitcoin, fine. So that's step one. Step two is we're going to eliminate the Federal Reserve. There will no longer be a backstop for the banks, and that's going to be a big shock to the banks. And if a bank fails, it's going to legitimately fail, and all the depositors are going to get wiped out. And what that's going to lead to is it's going to lead banks to stop this crazy high leverage fractional reserve banking, and only a few banks will remain, and they'll be the people who have 50% reserves against their deposits. And then the final thing we're going to do is we're going to eliminate the FDIC, which is the insurance against all those deposits. I mean, in the Silicon Valley Bank example, there was 17 trillion of deposits that were at risk, which is why they broke the Dodd-Frank law and created an exception for Silicon Valley Bank to bail it out. And the fundamental problem, Corey and Dan, that I've been talking about and the book talks about is that the monetary masters have set up the system in a heads they win, tails we lose basis. Because heads we win when it's capitalism and everything's going well for them. And then when it blows up, they have a gun to our head and they say, give us the money, print money, or else, the ATMs aren't going to work. Mm-hmm. So just print the damn money. And yeah, they can print the money. That's fine. But that printing of the money, you and I, we all pay for that. We pay in the terms of everything we do is more expensive. So it's free to them because they made the mistake and they don't suffer the costs. But it's expensive to us because we go to the grocery store and pay the higher prices.
Right. Private.
It's just that simple.
Private profits and socialized losses, right?
Exactly. I mean, we don't have capitalism. A lot of people, I understand, Bernie and AOC and their anger with capitalism and billionaires. I get it. I mean, they're right. It's not a fair system. The solution of taxing people, that's not going to solve it. There's not enough tax income to solve it. The solution is to return to sound money.
Yeah, try to convince those folks, in particular, those two folks of that.
I like it.
Well, I agree. That's going to be an uphill struggle.
Yep.
So you're saying gold, silver, Bitcoin, not taxable, no capital gains taxes, nothing like that.
All of that, and the government then, the government eventually, what I think they should do is they should take the dollar and back it with Bitcoin or back it with gold, and just say, a dollar equals this much of that. And at that point in time, the dollar will stop sliding against all foreign currencies and against those other two assets. I mean, if they don't do that, that's fine. Eventually, gold and Bitcoin will just kind of replace the dollar because everyone will look at it. This is what we call Gresham's law, right? Everyone will just look at it and say, why, people will get dollars, they'll be paid in dollars, they'll hold some dollars, but nobody would ever want to hold those for long term because they know they're losing value.
Right.
And so you would very much like my friend who I was speaking to who grew up in Argentina, and he said, we'd get paid, we'd immediately buy shit. We'd go buy food.
Yeah.
Because we knew that a week later it was going to cost more. You figure it out.
Right. Yeah, I love that message. I love that letter. That's that speech. But I've become at my age so skeptical that a large government will do anything like a large government is just a massive incentive for corruption to occur. And the problem,
sure, and to protect themselves.
Yeah, and like, for example, like do you think that like black budget items and all this stuff the intelligence community does when they run around the world swatting hornets' nests and making a fortune doing it, do you think that's easier for them with fiat money, or do you think it's easier with sound money? I think it's easier under the fiat system, and I think they'll protect that, with their lives, literally.
I have to completely agree with you that my proposed solution is unrealistic, or it's kind of a dream, in the sense that it's unlikely to happen until we're pushed to it.
Yeah.
But let's imagine a scenario, and I don't like to paint this out because it would be an unpleasant scenario, but let's imagine a scenario where fiat really fails fast and hard.
Yes.
And
no, you have to say this. Yes, absolutely. Don't take me wrong. And your book is great. Yeah. It must be said. I'm sorry. Go ahead.
Yeah, no. And so the reason for the book is I'm hoping that when that happens, rather than embrace some socialist solution, enough people have read the book, and people look at it and go, "Gosh, I see what happened here. The money really failed."
Yep.
Huh. From 1789 to 1946, well, even till 71, arguably, but we were more or less on a gold standard, and hey, this country did incredibly well during that time frame. Mm-hmm. Well, what changed since then? Well, in 71, Nixon abandoned gold. We did okay for a while, but it's been a long, slow decay. And this isn't the country that you and I grew up in, Dan. I mean, you know that, I know that. It sucks by comparison.
Mm-hmm.
And so I think hopefully at that point in time, somebody will say, there's certain truths that are kind of universal over time. And one of them is sound money works. And if we want to fix this, we got to go back to sound money.
Right. And there is a chorus of economists who say, no, gold didn't work.
Oh, absolutely. Well, that's the Keynesian lie.
Yeah, right.
And the book debunks that, 6 times from Sunday.
Yeah.
I mean, I really, really debunk that. And it's because the Keynesians it's a protection racket.
Mm-hmm.
I mean, they're all protecting their own little turf. I mean, can you believe, like, the Federal Reserve has like 40,000 employees? I mean, what the hell do they all do? Seriously.
That's right.
They got like 1,000 economists and they still can't get it right.
Yeah.
You know what I'm saying? I mean,
right.
It's like these, as you point out, when you have a big centralized government, I mean, the government's mission doesn't become to do what's best for the people. I mean, some people in it try and do that, but the government's mission becomes to perpetuate itself.
Yes.
Yeah. Therein lies the problem. Right.
And it's more specifically, though, it's the incentive. It's like a massive pool of capital that doesn't really belong to anyone. People
Correct.
are just incentivized to get a piece of it and to be near it. It's another type of Cantillon effect. As soon as before the laws hit, I want to position myself to benefit. Before
absolutely
XYZ happens, I want to be in on it. I want to benefit. I want to have, I want to be appointed to some board of directors after I finish, being a senator or whatever.
We can see that in the way the military-industrial complex rewarded these people. And I mean, there's just so much graft and grift. I mean, I'm always stunned when I see these people go to Washington, D.C. with not much of a net worth. And then that the senators and congressmen, their salaries aren't big. I mean, they're big by, middle-class standards, but, you don't get rich on a couple $100,000 a year.
No.
And yet these people end up with multi, 10, 20, 30, $40 million. I mean, how does that happen?
Yeah. How indeed.
I mean, they're not Warren Buffett. They're not that good at investors. I mean, it's corruption.
No.
Right.
They're certainly not.
Yeah.
So that's, I think, and we started to sort of say this before, we get to like, nothing really changed. We don't really get sound money until we get our Javier Milei moment when all else has very, very obviously failed for years and years and years and years, and we're all fed up with it.
Right. You think? I think that's absolutely right, and I think that moment is coming at some time in the next 10 years.
10,
and
that's soon.
Maybe even maybe. Oh yeah. Well, it is and it's not. I mean, my prediction is that it'll get worse in the next 4 years, and because we're in a fourth turning. The Republicans will lose the next election just because people will be so pissed off at how bad things are. Mm-hmm. They'll just blame the people in power. And the Democrats will be promising a lot of goodies, UBI and subsidies and stimmy checks. And so people will vote for that. And then Stephanie Kelton will be Treasury Secretary and the deficits will run wild.
Talk about the big print.
Gold will go to 50. Yeah, the big print. Gold will go to 50,000, and Bitcoin will go to 3 million, and the currency will fail.
Yep.
And everybody will say, "How the hell did this happen?" And at that point in time, we'll have a very serious discussion about returning to sound money because it'll feel like there's nothing else we can do. I mean, every other thing has been exhausted. It's the only reasonable choice. It's Churchill, right? The Americans will do the right thing after they try everything else. So that's kind of how I see it playing out.
Mm-hmm.
But I even if it doesn't play out exactly like that, I'm quite certain that inflation is a certainty or a very high probability event in the next decade. And therefore, from an investment point of view, I feel very comfortable being invested in things that the government can't print, which would be gold, silver, Bitcoin, and real estate. Because they all have value. And whatever. At some point in time, we're going to have a new currency, and the old currency is not going to compare very well to the new one.
Mm-hmm.
But if you own those assets, they'll all just reprice in the new currency.
Right. It's like the old European old money, land, gold, and art. Art is portable.
Right.
Gold is somewhat portable. And if your property rights are maintained after the war's over or whatever, and you go back to it, your land is more valuable or whatever. So.
I think that's right.
Yeah.
Yep. I would say even in the meantime, anybody who owns gold or Bitcoin, in the last year or two, overall, you
Oh,
got to be
absolutely.
pretty
Certainly,
happy.
certainly
Right?
compared to what
Even now.
used to be the base layer of the financial system. I mean, but think about how far the Treasury bond has fallen. I mean, there was a time when the U.S. 10-year Treasury bond was the best asset in the world. It couldn't default, paid you a good rate of interest, blah, blah, blah. In Treasury bond and gold terms, since COVID started, gold's up over well, it was when I wrote the book, it was up over 200%. It's probably 250 now. And Bitcoin's up over 2,000%. I mean, the people who are the suckers at the table are the people who are hanging on to bonds. Anyone who has any bonds of duration,
Right.
not short ones. I mean, if you want to get paid 3-4%, whatever the 2-year, the 1-year, the 6-month, or fine, great.
Mm-hmm.
You don't have any duration there. You can just wait until it matures, and the government will pay you back your principal. You know that they'll print the money to do it.
Mm-hmm.
But if you've got duration in a highly inflationary environment, you are really really putting a serious ding in your wealth.
Yep. Yeah, especially at nominal 4 or 5%, you're getting killed.
Well, and that's the other thing. I mean, the book talks about this. I mean, we all know the inflation numbers aren't honest, right?
Yeah, that's right.
I mean, my auto insurance is going up more than 3% a year.
Right.
I think my grocery bill is going up more than 3% a year. The teams or the longshoremen, the port guys, they just got a 60% 10-year deal. Or I'm sorry, 60% 6-year deal. So that means that their wages are going up 10% a year for the next 6 years.
Yep.
That's not 2 or 3%. That'll get passed on through the economy. So
Yep.
Inflation is now the problem of our age. It's very hard for people to see, though, guys, because the last 40 years we did have a deflationary trend. I mean, the China price and a lot of things we had a lot, we fracked all that oil. We had a lot of positive things going on that created a lot of deflation, and
Right.
and that was good, on a relative basis. The technology stuff helped.
Right. Lots
But,
of valuable stuff priced in dollars, so the dollars become more valuable. Great, right? But
right.
yeah, can't go on forever, and it's forever seems to be
Well, the trend is
nearly over.
The trend has changed. Yeah, the trend has changed, and until they figure out a solution to this issue of debt, we're people who are in fiat currencies, I think, are at great risk.
Yep. And the other day I published a piece about the need to understand history, because everything every financial advisor on earth is telling you has 1980 and after assumptions, right? It's post 1980 assumptions, and that's not working anymore. That's not going to work. You really need to know history.
Yeah. What people are missing is the 100-year cycle. I mean, the last 100-year cycle was the 1913 to 1930 or so, and here we are 100 years on, and the same thing is occurring as occurred back then: sovereign debt problems, and they were either highly depressionary in the U.S. or highly inflationary in other points. And so, I mean, it's funny. Remember when the great financial crisis, how Bernanke or somebody else said housing prices have never gone down nationwide, so we don't have to worry about a housing bubble.
Yeah.
It was a regional. Remember that, Dan?
Oh, yeah.
And I thought to myself, that guy is lying. I mean, he was right in modern terms, post World War II.
Yep.
Okay.
Yeah.
But I quickly went and did the research. You know how much housing prices fell between 1929 and 1934?
How much?
They went down like 67%.
Right.
I mean, I know because my grandfather, bought a house during that time frame that he said he bought for a third of what it would have cost in 28 or 29. So, I mean, so people people tend to, you tend to look at kind of in your lifetime what has happened, and you've got, as you point out, you have to study history and dial out a little bit.
Yep.
And if you look at these longer term cycles, what you see is that they tend to repeat as well.
Yeah.
So,
Ray Dalio studied this stuff. He said he had to go back hundreds of years to really understand the full cycles. Yeah. So it's
correct. And the beauty of those books is he documents in great detail.
Oh yeah.
How the stuff recurs over and over and over again.
They're great.
Yeah, it gives you great confidence that we're not just making this up. There's a lot of evidence. I've often said, and I say it in the book, and I really believe this to be true, that I think great investors are good at pattern recognition. and this is the history doesn't always, exactly, but it rhymes. And so
Mhm.
you kind of look for the pattern. And I mean, the pattern that's going on right now is we are behaving like an emerging, nation with a debt crisis. Something's going on right now that's very unusual. We've got stocks are going down, bonds are going down in price, yields are going up, and the currency's going down. Typically, when that happens, that's an emerging debt crisis, an emerging currency crisis. That hasn't happened for a world reserve currency, certainly not in my lifetime.
No.
But we're in the process that's happening, and it kind of goes to show you that if you pursue emerging market currency behavior, you get emerging market currency results. I mean, we've seen this in other countries. We just haven't seen the U.S. do it. And everyone thought, well, it's a milkshake. We're the best dirty shirt. Well, we are until we're not, and we're now at the stage where we're not. So
yeah, I still think part of that milkshake theory that's right is that the other currencies, and we've seen this in the past few years with the yen and the pound.
Absolutely.
They go bad worse first, than the dollar first. And it's all
completely agree.
And none of it is like, none of this is lockstep, that adding yet more of a complication, right? These other currencies look great. The euro versus the dollar can look great, but over time.
Brent's a good friend, and that's a great theory. And he's been right about it in a lot of respects. And as I always said to him, Brent, at the end of the day, all these pieces of paper are going down compared to what we really care about, which are real assets, gold, silver, real estate, and Bitcoin. I mean, so, if the dollar goes down faster than the yen goes down, I mean, who cares?
Yeah.
I mean, it's all going down compared to stuff.
Right. And to be fair to him, he's always maintained the milkshake theory is gold is the last man standing. So
exactly. He's got it. He's a big bull. I think he did think we'd go on a lot. He's believed that we could kick this thing forever.
Mm-hmm.
And I always said to him, I don't know, man. I think the end is near, and I think I'm starting to look a little more right. Because it appears to me we're getting closer to the end game right now.
Right.
But I have to say, I mean, I look to give him his due. I mean, I thought it was all over in 2008. And here we are. I'm serious. I thought, here we go right to hyperinflation.
A lot of us did.
I'm serious. I mean,
yeah.
Right. Remember how we all thought that?
Yeah. And we felt like we were right for 3 years when gold went back to, up to 2011, 2012.
1900. Yeah. Silver was at 50 and we were feeling like geniuses.
Yep.
And then we got the shit kicked out of us. Yep. So, I mean, so it just goes to show you how anybody can be wrong at any time and how these cycles do take longer than you expect to play out.
Yeah. So. You can be right for years at a time. And that's the dangerous thing, isn't it? That's the dangerous thing I feel in the S&P 500 right now, because people, they buy mindlessly, right? People call it passive investing. I call it mindless investing. No reference to fundamentals whatsoever. And they look back to 1980 or whatever, point, or the 90s or whatever, and they say, see, it worked. You can just keep doing it. It doesn't even matter. We can get a major financial crisis. You just keep buying. Buy every dip. And I'm like,
if you bought in 09, you did great. If you bought at the bottom of 20, you did great. But at some point the fundamentals get connected, and John Hussman, I think, does the best work on the fundamentals.
Yep.
Has a great chart that just shows, the data point we're at today and how much more overvalued we were than we were in 1929.
Mm-hmm.
And from peak to trough at 29, the market went down 82%. So, he also, his math suggests that we could go down 65%.
Yep.
And we would still be, only within the range of fair valuation.
Right.
So,
and that non-financial market cap to GVA that he has, that's the one that correlates the best. That
I agree.
There's no, history of that metric says we are absolutely looking at a serious drawdown of the kind you just mentioned. I mean, it's like virtually every time.
Exactly. That's exactly right. And yet, the people who know that, understand that, and are following that model are quite limited. And a lot of people criticize him because he's managed money and his fund hasn't done particularly well, but he's actually a brilliant economist.
Yeah,
his analytical work is fantastic.
Yeah,
his money management work has been not quite as good, but
right. But that, for me, he's like a specialist in that one thing of understanding the valuation of the overall stock market, which I maintain is a useless exercise like 90% of the time, right? It's good at the peaks. That's when you had better know it. You had,
Well,
you know,
it informs you of the extremes, and it
yes.
informs you of when things are incredibly cheap.
Yep.
And if things are incredibly cheap and you have time on your side, well, you buy and you wait.
Mm-hmm.
And it also informs you when things are incredibly expensive. And by the way, they were incredibly expensive 3 years ago.
Mm-hmm.
And being short this last year or two had been no fun at all
Yeah.
because I had some personal accounts I was shorted.
Yep.
But I knew things were incredibly expensive, and I thought I would eventually get paid. And now I'm starting to get paid.
Yep.
So,
Yeah. So what I've done is, instead of being short with too much, too many bips, I've shrunk it down so that it's basically like a tail risk hedge, and I buy
yeah,
leap puts and just say, okay, here's 100 bips or whatever it is, leap puts 2 years out, and forget them and let them expire. And the exercise of letting them expire and losing has led me to hold through the current problems here and amortize quite a bit of the previous loss, frankly. And
yeah.
I think at some point we're gonna get that drawdown, and then hopefully I'll be nice and liquid to buy lots of cheap good stuff.
I think
Besides,
that's right.
I wanted to talk to you, Larry, though, about one more thing before we get to our final question.
Yeah.
Besides buying, gold and Bitcoin and silver and these things, though, you buy gold stocks too, as well.
I do.
The
Yeah.
equities. I feel like that trade has turned I mean, a lot of people are saying this. It's fairly odd. That trade has turned as well, hasn't it? It was sort of, it
As
used to be the old leverage
Yeah,
to gold trade. Then that wasn't working. Now it's working again, isn't it?
it is. It's starting to. And there's a large catch up because
Yep.
it's way behind. At these gold prices, the stocks are massively undervalued. And there's a chart that I posted on Twitter a while back that showed how gold's GDX is just really broken out.
Yep.
And there's another chart even further on Twitter, going further back, that shows the gap between the price of gold and the miners. And the miners really do not accurately reflect the earnings power they now enjoy at these kinds of gold prices. And
Right.
that's really because, as I think we spoke about earlier, the analysts were all thinking, well, okay, yeah, gold's at 2,500, but it's going back down. And if you think the future price is going down, we know the cost to mine this stuff goes up every year with inflation. So if you think it's a spread business, so if you think the price of the metal is going down, well, then the profits are going to decrease. But
Mm-hmm.
I think what's taking place right now is people are starting to think, hey, you know what? There's something different going on here, and the metal maybe isn't going back down. In fact, it's going to go up.
Yeah.
This is the Goldman Sachs $4,500 number.
Right.
Oh my, if that's the case, then I can imagine the earnings of this business are going to be really, really big in the future.
Right.
And so, they start buying these stocks. And by the way, the stocks were pretty cheap, even if gold doesn't go up. I mean, I have a lot of companies in my portfolio that are trading at 3 to 5 times cash flow, which, as you guys know, that's a very low multiple compared to the market.
Mm-hmm.
And that's it. Those were modeled at $2,500 gold price before this run.
Right.
So, at the peak in 2011, Dan, back in the good old days when we thought we were all going to get rich on gold and silver, these companies were trading at 20 times cash flow. So, you could get these stocks will go up because multiples will expand.
Mm-hmm.
Then they will also go up because at $3,500 gold, that cash flow isn't the same as at $2,500 gold. It's bigger. So you kind of got a twofer going on there. And I'm extremely bullish and constructive on gold and silver mining stocks for the next year or two.
Yeah, $3,000 gold hits those earnings. It's game on.
Well,
yeah.
tomorrow night, Newmont reports, and I think it's going to be a shocker.
Yep.
Because this quarter has been pretty high pricing all quarter long, and I think they're going to blow the numbers out of the water. My fund is loaded up on Newmont calls, so we'll see. We also own the stock, but because I don't think people really understand how much operating leverage there is. I mean, I was looking, the Newmont ASIC not that long ago was like $1,200 an ounce. I mean, good Lord, if you sell, if your average selling price, let's say their average in the quarter might have been 2,900 or 3,000,
Mm-hmm.
that's $1,800 a profit or $1,900 a profit per ounce. Oh my God. I mean, these are businesses that used to survive on $300 or $400 a profit per ounce. I mean, these are really profitable businesses at these prices. So it's
All right.
it's kind of a pound the table moment for me on gold stocks.
All right. I just wanted to get your take on that before we get to the final question, which is the same for every guest, no matter what the topic, even a non-financial topic. And if you've already said the answer, by all means, feel free to repeat it. And the question is simply for our listener, if you could just leave them with one thought today, one takeaway, what would it be?
I would say to your listeners that in terms of your investment, holdings, you should seriously consider how much, the possibility that we are now in an inflationary environment, not the same environment for stocks that we've had for the past 40 years. And you should ask yourself, what's my weighting in stocks versus what's my weighting in bonds versus what's my weighting in silver, gold, Bitcoin, or real estate? And the reason being, I just strongly believe inflation is going to be a persistent problem for the next 10 years. And that, if you're all in stocks and you're not in any of the other things I just mentioned, 10 years from now, you're going to experience regret. I mean, the stocks will go up for sure, but the other stuff, in my opinion, is going to go up vastly more. And so in the book, I actually recommend that people at least have 25% of their assets in what I consider to be, inflation protection assets.
Mm-hmm.
But everyone's, this isn't financial advice. Everyone's situation is different. You got to choose your own risk, et cetera, et cetera. But I would just, say that the final point I would kind of make is there are a lot of people, particularly gold people and particularly older people, who are very skeptical of Bitcoin, rightly so. There were a lot of crypto frauds, bad people, Sam Bankman-Fried, all this terrible stuff that happened in that industry. But I would ask that they reconsider that the invention of Bitcoin is actually a technological invention that's really important. And it's, I think, the most asymmetric asset in the world right now. And I think I say to my older clients, I said, look, you don't have to own a lot of Bitcoin, but owning zero Bitcoin is not right. You got to own 1%, 5%, 10%, 15%, because this is something that can and probably will go up 10 to 20x in the next 10 years. And if you don't have any of it, you're going to have regret that you don't have any of it. And if you have concerns or questions about it, I really, once again, I'm trying to sell books here, obviously, but I'm also trying to help people. The big print, the first half of the book is why inflation's a problem, how they've done it to us, how the government system is totally messed up. The second half of the book is really, the reason why Bitcoin is your safest and best bet to protect yourself from inflation. Gold's great too, but in terms of upside optionality, nothing really beats Bitcoin. And I deal with all the, the complaints and all the naysaying and the energy use, everything. I take on every single skeptical FUD item of Bitcoin and I deal with it. And trust me, I didn't always believe in it either. It's taken me years and a lot of work to come to the conclusions I've come to. But I really think people owe it to themselves to learn about it. It'd be like saying you didn't, in 1994 or 5, saying, well, the internet's not going to be important. Or when cell phones came out and Michael Douglas was walking around with a brick on the beach in Wall Street saying, that's never going to amount to anything. It's 40 cents a minute. Mm-hmm. This is a technology that's going to change the world. It's really, it'd be like saying, oh yeah, Blockbuster will be here forever, and then Netflix comes along, right? It's a change. It's just a change, and the world is changing. The world's more digital, and this is a hard digital currency. It's digital gold. So please, please, please take the time to learn about it, even if you're skeptical, because I think you'll be rewarded for doing so.
All right. Great answer, Larry, and thank you for being here. It's been a wonderful discussion. I've really enjoyed it.
Thank you, Dan. I've been a long-time reader and admirer you guys, and I haven't ever met Porter, but I think I've spoken to him once on the phone, so I like Stansberry a lot. And if I can ever help you guys out, let me know.
Oh, you bet. Same to you. Yeah.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.